Good morning, everyone. This is Daily Trading Analysis with the weekly recap for this week, the first entire week of May, in which we didn't have a lot of economic data. A couple of Feds were talking throughout the week, and the most important thing were the Michigan consumer sentiment preliminary on May, which came way lower than expected. We were expecting from 77 a little bit of an uptick, of a downtick to 76, and we got 67. And also, the consumer expectations are also higher to 3.2%. So as you can see, we are seeing a lot of Feds talking this week and no economic data. So this week was a pretty range week in which on Monday we just continued from Friday, but then Barkin, William, Kaskari, Jefferson, Colin, all these Feds were basically reinforcing the message from Jerome Powell. They are data dependent and they need to see more progress on inflation and also labor market weakening. So there's not too much to talk about on the economic data, but we can review the interest rate decisions that are still showing one cut and two cuts after the FOMC. So right now we are at 525. The first cut would be in September, and a second cut it's priced in barely on December. As you can see, we can see 35% for no cut and cut. So for sure, we are going to cut one time and two times if things are getting better on the inflation battle. But for now, I think markets are pricing in one cut, not yet the second cut. That would be the markets pulling back. But as you can see, we are going to see that in the charts. The first thing that we notice in the 5-day chart and the 10-day chart is the performance of utilities. Look at this. On the 10-day chart, we are with utilities at 7.67%. And also real estate at 3%. Technology is the third one. Energy, it's been ranging throughout the lows with -2%. And consumer discretionary, due to the data that we've been getting, it's the lowest, but also plus 1.24. On the 5-day, we are seeing the XLU also dominating the charts. XLK, a little bit of weakness, but still 1.50, and XLY consumer discretionary really seeing the weakness. And I think that's the reason why we are not overperforming on the Nasdaq or in the S&Ps. And let's now go into the charts to really see where are we, because we are not as bad as people may think. I think everyone was really waiting for more pullback, and we established our pullback here. That's a higher low from the start of 2024, and this was our week. We tried to push higher on Monday, and we were trapped in this range throughout all the week. And on Friday, we tried to push higher, but we got rejected, and we were coming back down. So this is a zone of a lot of resistance, so it's going to take way more catalysts to really see a push from there. And let me just show you the analysis that I was doing throughout the week is based on volume. We are now in the point of control from the all-time highs to the lowest pullback, the lowest pivot. So as you can see, really choppy, but we did pullback, a higher low, and now we are pushing with a higher high. So in terms of trend, I think we are okay, but we are struggling in this zone because we have these two big red and green candles, so a lot of volatility in this block. And we are in the middle of everything, in the middle of the volume, point of control. So if we are going to reject, it's going to obviously take more sellers are willing to fill this fair value gap. But in order for us to really push, we need catalyst, because all this volume, I think, is sellers defending their positions. But we are not selling off. So this is quite bullish in my eyes. I would have preferred this week to really push back and pull back to the daily fair value gap, but we are still holding there. And this is more bullish than people may think. In terms of Apple and individual tech stocks, Well, Apple, after the big buyback, I mean, it performed on Friday pretty poorly. We pushed on Thursday, and on Friday, we basically sold off the entire day to finish the day minus 0.82%. And since the open, Apple was basically selling off 1.50%. So Apple pretty weak after the buyback because I think the earnings were not super good and people were focusing basically on the buyback, on the 110 billion of buyback. And I think that's not good for everyone. It's only good for shareholders. Apple is buying its own stock, and that's not good for the forecast. Investors are big money, want catalysts to push higher. And I think that buyback is not enough. So that's why Apple is struggling to continue higher. We are holding the gap on earnings, but I don't see Apple really strong to really push this trend line of this year. Microsoft, however, is continuously pushing this narrative of AI, and we are at the zone in which we are at maximum resistance. And I think the tension, the strength is showing that it wants to break out. So Microsoft is way more bullish than Apple. Tesla, it's basically losing the range because has its own problems. Elon Musk, manufacturing, now investment in another big business related to AI from Elon Musk. I mean, Tesla is, in my eyes, not anymore in this seven magnificent, but it's still something that we have to talk about. And I think that after a big gap up here, we just lost the gap. And this, in my eyes, is a rejection. So I can see Tesla filling this another gap and then do things like this in the 140s, but pretty weak and not interested on Tesla. Amazon, very related with consumer discretionary, we can see a new all-time highs up here, and it's pretty strong. We tried, we rejected, but at least we have on Friday this red candle due to consumer sentiment being pretty weak, and I can see now Amazon pulling back a bit, but be careful because I think Amazon is quite strong as a stock. We just reached on Thursday new all-time highs, and you cannot discount that. Google AI, that is now AI stock, Google, we all know that. And we've been thinking about OpenAI, Microsoft backed business. OpenAI is going to report the new browser powered by ChatGPT on Monday. And Google has its own event on Tuesday. So Google, it's just chopping due to that uncertainty around what is OpenAI going to show in that event on Monday. So Monday, Tuesday is going to be everything about Microsoft and Google. So pay attention to that. Google is quite strong, holding these levels 170, and it's barely at 3% from all-time highs. So it's already there. Nvidia pushing the high end of this zone. So also with Microsoft trying to push for this breakout of this range. And Meta just dealing with the gap that, I mean, we are just pushing. Look at this gap down from earnings. And since the gap down, we are just 7% from that. So Meta is also super strong. So don't discount also Meta. Everything it's been pretty strong this week except for Apple and Tesla. So the Nasdaq is really strong, but we are not seeing that movement. We are not seeing that continuation. But I think it's because not only the Magnificent Seven, but also there are some sellers here defending that we need to pull back. And we may not pull back, but it's obvious that in this zone of big volume, we have to encounter a lot of resistance and a lot of choppiness. So in terms of other markets, we have to always talk about dollar. Dollar is doing its thing, and it's doing, in my eyes, the proper thing. We accumulated here, and then we dump. We dump down, and we encounter this bullish candle. We push higher, and we marked pretty perfectly this range in which I want the dollar to hold if we are going to pull back on the equities. But look at this Thursday with the comments from the Fed, and also we got a little bit of bounce on Friday due to consumer sentiment. But as you can see, this is a lower high. This is the high and this is the lower high. And we are not closing above this range. So dollar might see some downside next week. And this fair value gap and overall this week is going to be my target. If we see the dollar going down like this, then we can see Nasdaq and other equities and other risk on assets really pushing that resistance that we're talking about on the daily. The yields are pushing, but are pushing after a huge red week last week. So we are seeing a little bit of an uptick, 4.8 on the 2-year yield, and the 10-year yield is right at 4.5. 4.5 is critical to me. I don't want the 10-year to push higher above 4.5, and I don't want neither the 2-year yield to push above 4.787 towards 4.9. That would be bad if dollar continues trending up and do a false lower high. If we do things like this, then equities might see some weakness. Because as you can see, treasuries are also finding some bottom. So we double bottom there and we are now pushing above the golden pocket. Treasuries are in a clear downward trend. So we need to see this breakout to really see positive sentiment towards some kind of cuts being already priced in 1 or 2, as we were reviewing before. So treasuries see this breakout, follow this breakout because it will provide some kind of fuel to the equities. And high yield corporate bonds are also now in the range that we were holding, and we broke out, but we are again down up in that range in the lower end though. So we need to see buyers holding this 76 range, but we have a gap that we need to see there. In terms of risk on and small caps and overall breadth, the small caps see an uptick this week. The Friday was really bad for them due to consumer sentiment, so it ended the week with a really bad sentiment. But overall, breadth is still improving. Look at this. We were watching this zone right in the weekly recap from last week. I was watching this breakout and we broke out, we pulled back, retested, and are now going higher. And look at the breadth. The breadth on the momentum on the 20-day moving average, the percentage of stocks is now 67. And as you can see, we broke out of this trend line. We are pushing and we are flat with that basically. So momentum is here on the 50-day moving average. The percentage of stocks also increased from 30 to 50. And on the 200, we recoup a little bit of stocks at 60%. So I think overall the market breadth is increasing, RSP is increasing. So we are seeing way better performance on the equal weighted S&P 500 than on the equities itself. On the Nasdaq, it's pretty weak due to Apple and Tesla. And last week, it's going to be everything about Microsoft and Google. But overall breadth was pretty damn good. If we see also the market internals from last week, on Thursday, we saw a big add on volume and at the same time a big advance on the week. But on Friday, after the consumer sentiment, a little bit of an outflow from volume, and the catalyst and the decliners were pretty much there. Friday was a pullback day for a lot of things, not the Nasdaq entirely because we were gapping up a lot. But in terms of volume, look at the volume on the Nasdaq, outflows totally, and in terms of advanced decliners, the same as the S&P. So pretty weak end of the week. That's what I would like to say here. I think we cannot discount the fact that we are holding up here against a lot of volume that is usually against the trend. And I think we are going to watch this zone around 350 18,350, and we have to go to a smaller time frames to really see what happened. So as we can see, we started the week pushing higher, we established the range, and we try to go lower, false breakdown, and we try to go higher, false breakout. So we are again in the middle of the range, in the upper part, showing strength, but in the middle. So basically, this order block on the 1 hour is going to really be key for me. We have also a daily inverse here that we just held throughout all the week. So this inverse, I would like just to tackle right now, explain it, and now leave it out, basically remove it, because we broke through the inverse and we bounce several times, continue higher. So this daily inverse, very fair value gap, was support throughout the entire week. And also the big push on Monday established this fair value gap that I was talking about, and we held that on Wednesday. We never took the sell side liquidity on this side. So basically this week. So I think this order block is showing you a strength and a lot of buyers down here. So more people may be accumulating. We tried to push higher and we rejected due to consumer sentiment. But I think I'm bullish for next week. The first thing that it needs to hold is basically this order block is the minimum. If we start seeing price below that, it would take a lot of space to really show you weakness, and that would be not ideal. But look at the Thursday. Thursday was a day of a lot of chop, but overall trend, and in the market internals, we are seeing volume coming in. Friday was the same thing in the inverse, volume coming out, but it was not the same kind of amount. So these weeks down here need to hold. This structure down here needs to hold. If we see price towards the order block, I won't be bullish anymore until we really reclaim at least this pivot. Otherwise, if we see a bounce there on this zone and we see a push towards this gap, this week, I can see a lot of squeeze happening with all these shorts here that were shorting the consumer sentiment towards the buy side liquidity. So again, I always show you the two options, the bearish and the bullish. I'm leaning towards the bullish side for next week because all the reasons that I explained to you, and I told you what it needs to happen for me to keep me interested on the bullish side. So this is the bullish side, and then the bear side is basically also pushing towards this kind of zone, towards the order block on the 1 hour. So these are the two options. As always, you need to be patient because next week, I think it's going to be a pretty interesting week because we have a lot of data coming out. Monday, non-news Monday, be careful with this Fed stocking. But Tuesday, we have PPI, and Wednesday, we have CPI. So a lot of things are coming out next week. We have to really be patient to wait for that specific information, because something that I want you to see on the 1 minute on Friday is that we were so bullish during the overnight. This was the overnight into these inverses, just pushing higher with a lot of strength, then pulling back and then pushing for my trade. It was pretty clear to me that the market wanted to continue go higher, and into the open we were pretty damn bullish. We pushed a lot, like 100 points, and then we dumped everyone because the bad numbers. This was the point in which consumer sentiment was released, and then we were just selling off and going into the close with a lot of weakness, not being able to just push higher. That's why you have to really wait for the numbers. You have to really wait for data to come out. Don't predict. Don't don't try to say, okay, I think it's going to be good, I'm going long. That's gambling. You really need to wait for the number, the market to digest, and then you can analyze, review the price action, and take your position. That's the way you have to trade big data, big economic releases like the next week. On Thursday, building permits, housing starts, and a lot of Feds talking, and Friday, more Feds. So next week is going to be packed with information. Despite this week being no information at all, next week is the other way around. We have to really be careful. We have to really be patient and disciplined to wait for the data to come out and assess the price action, and then take a step up and take our positions. I think I'm bullish, but I'm going to be patient. And that's all from my side. As always, thank you for your time. If you found these videos useful, these weekly recaps that I put a lot of effort on every Saturday, please give it a like, subscribe to the channel, because I do this every single weekend on Saturday to review the week from the fundamental point of view, from the technical point of view, for you to be prepared to review your trades, to take your setups, and to analyze your levels during the weekend, and next week be really prepared for everything. That's how you are professional in this world. That's how you trade, and that's how you are profitable and sustainable in the long term. If you like these things, join me every single Saturday, and also throughout the week, I do videos every single day for market forecasts, market updates, and market recaps. I appreciate your time as always. More than ever, this week has been a zero economic data week, barely. But next week, PPI, CPI, and a lot of Feds are going to provide volatility. And volatility means opportunity, but you have to be patient, disciplined, and you have to manage your risk. Stay safe, everyone. Have a nice weekend, and see you on Monday.